Hi friends, Devang here. Welcome back. So we had been doing revision of your subject of EIS in CA Inter. Lecture 1 we did revision about chapter number 3. Lecture 2 we did revision of chapter number 4. This is now lecture number 3. Here we will be doing revision of chapter number 1. Chapter number 1 in your subject of EIS, that is regarding automated business processes. So first, a general background. What is automated business processes? Well, basically this chapter is about general introduction regarding softwares used in business. Anyways, it is chapter 1 of your syllabus, so naturally chapter 1 has to be introduction of the entire subject, or rather over here it is introduction about softwares used in business purpose. Yes, so automated business process means that my routine business activities are automated using softwares. My routine business activities automated using some softwares, that becomes my automated business processes. Now under this chapter, first I had given you certain basic differences between three important terms. Let me start from that. I had given you differences between three terms, that is business process management, business process automation, and business process reengineering. BPM, BPA, and BPR. And in fact, before that, I had given you explanation regarding what exactly is a business process. Yes, chalo, reminding you all that again. Well, the first term, business process, indicates what? Business process indicates the basic routine activities done in my business: purchase process, sales process, etc. Yeah, so all the different business activities, routine day-to-day activities done in my business are called as business process. Business process management means to manage these activities in a better way. Well, what was the best way to manage these activities? I told you that the best way to manage these activities is to do standardization. Standardization as in you find out standard methods of doing the work and tell all your employees to do the work in that same exact standard method, so that none of the employees will use their own judgment in doing the work. Well, everyone will do the work in exact same standard method. Yeah, it is like I had given you example about, say, McDonald's. In McDonald's there is no chef. Why? Because the way they make the food is standardized. Every single person working in McDonald's will make the burgers in exact same standard way. Yeah, that is business process management. Third one, business process automation. Well, this says that if BPM is doing all the activities in a standard way, then out of all the processes involved in your business, in your work, maybe some of the processes can be automated, because anyways they are standardized as in all the work is done in the exact same standard way. If all the work is done in exact same standard way, it might be possible that you can use computers to do that work, you can do automation to do that work. Yeah, so that will become your business process automation. And the fourth one, business process re-engineering. Well, the word re-engineering indicates an extension of automation. While in case of automation, out of say 5 processes in my business, some of the processes were automated. But in case of re-engineering, all the 5 processes are completely removed. Instead, you make one new process which is with use of computers, and that gives you drastic benefits. Yes, once again, business process re-engineering means all the 5 activities are completely changed and you convert that into one single activity. All 5 activities are combined into one single process, that is also with use of computers, and that gives you maximum benefits, that gives you major benefits. Major benefits, like say if BPA would have given 70-80, BPA would have given 10-20% savings in time, savings in money, then BPR would have given 80-90% savings in time and money. Yeah, that would become your BPR. Well, to understand these things, I had also given you certain examples. Well, 2 examples I will remind you. First example I had given was regarding, say, Domino's Pizza. In case of Domino's Pizza, I told you that they have I classified their work into 5 processes. Process 1, getting order from the customer. Second, giving the order to the relevant Domino's kitchen, Domino's outlet. Third, making purchases for making for the pizzas. Fourth, making the pizzas, cooking the food itself. And the fifth one was delivery of the product. Yeah. Now, if my if the Domino's business is into these 5 categories of processes, then BPM means that all these 5 activities are standardized such that there are same standard methods of doing that work. Whether employee 1 does that, or 2, or employee 3, anyone does the work, he will do it in the exact same manner. Well, then comes BPA. I said that out of these 5 processes, can all the 5 be automated using computers? No. What has Domino's actually done is that they have automated getting order from the customer and forwarding the order to the nearest Domino's kitchen. Rest of the 3 activities they have not automated. So automation was done only in 2 of the processes out of all 5. Well, if automation is done in only 2 processes out of 5, that becomes my BPA. While BPR, I changed the example. In case of Domino's example, all the 5 processes cannot be automated. But for BPR, I gave you another example. Remember, I gave you example regarding cash withdrawal. Earlier, before ATM machines were discovered, then for cash withdrawal, you had to write a check, you had to go to the bank, you have to deposit the check, you have to run through 3-4 different counters to get your cash. But now, due to ATM machines, you don't have to do any of those steps. Rather, now that you have ATM machines, how do you withdraw cash? Well, with the ATM machines, all you need to do is you just need to get the card, swipe the card, hit the pin, get the cash. So earlier, if it would take 20-30 minutes to withdraw cash from the bank branch, now because of ATM, it takes only 2 to 3 minutes to withdraw cash from the ATM machine. So earlier it would take 20-30 minutes, now it takes just 2 to 3 minutes. You see, there is 90% savings in time. This becomes my BPR. It is a complete change in technology. All the activities were automated. That becomes my BPR. It gives me drastic savings in time, savings in money. Done? Yes. This was the basic starting point I covered in the chapter. Anyways, so that explains my automated business process, that is business process automation. Now this chapter I had split again into 2 parts. Yes, one part of the chapter was diagrammatic presentation, under which we learnt about flowcharts. Second part of the chapter were all other topics here. So during the revision also, first I will revise all these other topics, and last I will revise some flowcharts. Yeah, flowcharts is, in my opinion, the most important part of this chapter. Flowcharts is the most important part of this chapter because, in my opinion, number one, if you understand the logic behind the flowcharts, you can easily make any flowcharts and it will be cash marks. And secondly, in almost every exam, if flowchart comes in the exam, then this flowcharts would become confirm marks for you. Confirm, because if you have the logic clear, this is the part where you can get full marks. I don't say that in other theory topics you don't get full marks. Yes, you can get full marks in other theory topics also. But flowcharts being a practical topic, it is more likely or more easier you might get full marks in that. Yes, so please do not miss out on the flowcharts. Yes. I had also uploaded another video regarding basic concept of flowcharts. Well, that video did not cover all the flowcharts, but I just gave the basic starting concepts of flowchart. Yeah. Over here, we'll be just doing a fast revision. So first, starting with other parts of the chapter. So first of all, introduction, you had categories of business processes. Categories can be operational process, supporting process, and management process. Operational processes are the primary processes, which are the day-to-day activities, which are the processes that will add value to your product. These are the processes which are delivering value to the customer. For example, in case of Domino's Pizza, the way they make the pizzas, the cooking part of the pizza is adding value directly to the customer. Delivery of the pizza is directly adding value to the customer. Adding value to customer means that customer pays money for this particular activity. I repeat, adding value to the customer means that customer will pay money to you for this particular activity only. That makes it the operational process. Supporting process are secondary process. These are the process that do not add value to the customer directly. Then why do we conduct this process? Well, it is conducted for supporting the primary processes. For example, say HR activities. HR activities like say recruitment of employees. Now, customer does not pay money to you based on how you recruit employees. Customer does not care how you recruit the employees, but ultimately that does matter to your company, that how you recruit the employees, that becomes your supporting process. And the last one, management process, was general back-end management activities. Management activities like say budgeting, planning, budgeting, variance calculations and all that is done by the management. And anyways, customer does not care whether you have done planning, budgeting, variance analysis or not. That is the task done by the management. Again, customer does not care for that, so that is also not providing value directly to the customers. Yes. Anyways, this is how you can classify the different business processes. Business processes means activities done in your business. Further, you have been given certain examples of management process, support process, operational process, vision, mission and all that you can read. Next is automated business processes, where we learnt about what is business process automation. I just gave you explanation what is BPA. It is automation of your routine business activities. Well, under that, objectives of BPA, benefits of BPA, okay, that we have made general discussion. But important topic here was steps to go about in a BPA, steps to be undertaken in order to ensure BPA is done. So what is this topic about? Say I had given you example about Domino's Pizza. In that example itself, let me continue. If Domino's wants to start using automation, if a company like Domino's Pizza want to now start using automation, then what are the steps involved in order to do that automation? So one example is that Domino's planning to start online ordering system. Or another example chalo also I can take is that imagine a college where student registration, the registrations that they take from the students, instead of manually making them fill up the form, they are planning to automate the student registration process. Automate, like maybe instead of asking the student to come to the office and manually fill up the registration form, instead of that I want to make a website where the student will log in and directly make the registration directly on the website. Well, considering these two examples, I will explain steps of BPA. Total 8 steps involved in your BPA. Now this topic here, remember I had told you, can be asked in two ways. Either they will ask you direct theory question, explain steps to do BPA, or they might ask you this in the form of a case study. Case study as in they will ask you an example like Domino's or like the college automation and all. They'll ask you example like Domino's or the college, and they will tell you that explain how Domino's can implement automation in its business. Explain how this particular college can implement automation in its business. Now, whether they ask you as a direct theory question or whether they ask you as a case study, in any case, your answer will remain almost the same. Only thing is that if they ask you theory question, you put these points as it is. But if they ask you as a case study, then also you put the same points as it is, plus within every point, within each point, you also write that how this point is used in case of this particular example. How this point applies to Domino's, how this point applies to the college automation. Yes, that few lines also you need to add. That is how you frame your answer. Yeah. Anyways, so step 1, define why do we need BPA. Define why do we need BPA, meaning you identify reasons for doing the automation. In other words, you identify what were the problems in the manual process. Problems might be like errors in the manual process, payment was not very conveniently obtained in the manual process, poor data management, etc., etc. Any of these problems you can mention. In case of Domino's also, you had problems like customer dissatisfaction, poor customer service was the problem in Domino's. Plus Domino's may you had the problem about say delay in the delivery because of the entire process, inconvenience to the customer, payment was not easily obtained from the customer. All these problems you can mention. These are the problems because of which you want to do automation. Step 2, rules and regulation. Now if you are doing this automation for your business purpose, well, businesses might have to follow many different rules and regulations. Any business entity will have to, might be having internal company policies, might be having industry regulations, or might also be having local, state and central government laws. Well, your business has to follow these rules and regulations. So you need to ensure that your BPA also follows these rules and regulations. So in order to make the BPA, in order to make the automation follow the rules and regulations, first you need to study that rules and regulations. Yeah. That is your step 2. You study the rules and regulations. Step 3, document the process. Well, documenting the process involves two things. It involves initially the kind of documents that are involved, like say what documents are involved, what will be the source of the documents, format of the documents, who is responsible for these documents. All these documents that are related with your business you need to ensure. Documents like say purchase invoice, documents like say MRN, PRN, purchase order. What documents are involved, what will be the source of these documents, what will be the format of these documents, who will be responsible for these documents, all that you have to decide. Plus documenting also involves to make the process on a piece of paper. You draw the entire business process on a piece of paper. This drawing that you make on paper is called as a flowchart. Who makes the flowchart? System analyst will make the flowchart. For whom do I make the flowchart? I will make this flowchart for whom? For the programmer. So system analyst will make the flowchart, give it to the programmer. Programmer can then make a program out of it. Yeah. Programmer will then convert that flowchart into the computer language, machine language. Yes. So that was the reason we make the flowchart. Flowchart is also a type of document that I have to make. And the biggest benefit of making that flowchart is that it will give you clarity of the process. It will help you determine the sources of inefficiency, bottlenecks and problems in the process. And mainly it will allow you to redesign the process. Once you know what is the process, then it will help you to redesign the process. Yeah. That is step 3. So step 3 involves documenting. Documenting involves two things: the kind of documents, source, format and etc. of the documents, and the flowcharts is also a type of documents involved. Step 4, you decide the goals of the BPA. Remember, goals of the BPA must be SMART goals. SMART, that is specific, measurable, attainable, relevant and timely. The goals should be SMART goals. Step 5, you employ a business process consultant, because generally this consultant will be some IT company. You employ an IT company which is a consultant or a partner who will help you through with the entire automation process. Step 6, calculate ROI of the project. ROI stands for, yes, return on investment. Well, basically this step is to convince the owners of the company, convince the stakeholders of the company to get their approval, because automation will involve a lot of cost. It will involve high cost, so they need to be approved by the management. You need to convince the management that this investment what you make in automation, it will give you very good returns on the investment. Yes, you need to convince the management that the returns on this investment will be pretty much good. In short, you need to show them cost benefit analysis. Yeah. So ROI is for the process owners to be convinced. You need to convince the process owners, that is owners of the company, to get approval from the senior management. You need to show them technical and financial feasibility. Technical feasibility means to show them that technology is existing to do this work. Financial feasibility means to show them that our company can afford this technology also. Yeah. Anyways, for that matter, you have to show them the benefits of BPA. Benefits of BPA like cost saving, manpower saving, space saving because now you don't need so many people, eliminating fines and penalties which you had to pay because you got delayed in the filings and all. Cost of audits and lawsuits can be reduced. New revenue generation can happen because of new technologies and all. Data collection will be faster because payments will come faster, and ultimately you can give better customer service. These are the benefits which I tell the top management. By telling these benefits to the top management, they might be convinced to do the automation. Yeah. And then the last two steps, developing the BPA, testing the BPA. Development and testing, simple, because once your top management is convinced, now you tell the programmer to make the software, that is developing the BPA, and once he has made the software, you need to do the testing of the software. After testing, you will give it for implementation. These are the different steps involved in the BPA. Total 8 steps involved, and like I said, this question can be asked in two ways. Either they will ask you direct question theory, or they might ask you to answer this as a case study. Anyways, for your reference, in the book I have given you two case studies as example for you to study, that you will be studying yourself. Okay, going further, next is the topics regarding risk and controls. Well, the discussion regarding risk and controls has come in almost every chapter. Chapter 3 we did, chapter 4 we did, now in chapter 1 also we do. But as I said, chapter 1 is a general introduction. Now if this is an introduction chapter, then the discussion of risk and controls over here is also general discussion. So here we have a general discussion regarding what is risk and what is controls. General discussion, what is risk, what is control. So in my opinion, many parts of this topic is not pertaining to technology, not pertaining to IT or EIS. It is just a general knowledge thing, that what is risk, what is controls. Yeah. So we'll start. What is risk? Risk is any event that may result in a significant deviation from the planned objective. In other words, any uncertainty will be called as risk. Uncertainty which might lead to an outcome which is not suitable to you, which is not planned by you. So, which might result in a deviation from the planned objective, or which might result in unwanted negative consequence, that becomes a risk. Next, under that, sources of risk. Where can risk come from? Take a risk characteristics, okay, that you will read. We'll discuss mainly the types of risk. Types of risk is discussed under three things here: business risk, then you have technology risk, and third you have data related risk. Data related risk we have done in chapter 3, that is risk of physical access to data and risk of logical access to data, that we did in chapter 3. Right now we go for the other two things, that is business risk and technology risk. Business risk, under that, number one, these are different types of risk, and as I said, this is general knowledge, general discussion about risk. So business risk. Business risk is a risk that will prevent a company from meeting its goals, prevent a company from achieving the goal, that becomes the strategic risk. Prevent a company from achieving its strategy, that is a strategic risk. Financial risk is the risk of negative financial impact, meaning risk of incurring losses, financial losses. Regulatory risk is the risk that you violate some regulations and you'll have to pay some fines and penalties. Operational risk is the risk that will prevent you from operating in most effective and efficient manner. Your routine operations get disturbed, that is operational risk. Hazard risks are the risks that are insurable, against which you can get insurance, fire insurance or terrorism or any such damage to your assets. Residual risk is the risk that is remaining even after all possible countermeasures are taken. Well, when there is risk, you will always take some countermeasures, but in spite of countermeasures, there will always remain still some risk. That risk remaining becomes the residual risk. In spite of maximum preparation for your exam, there might still remain a risk that you might not clear the exam. That becomes a residual risk, but you will still try to make that residual risk as less as possible. Yeah, that becomes your residual risk. Next, technology risk. Now technology risk, I'll take example of a banking company. Banking companies use softwares like core banking system. Banking company use a software like core banking system, that is the technology that the banking companies use. So under technology risk, most of the discussion here is pertaining to an example of a banking company using CBS technology, core banking system software. Anyways, we will be learning CBS software in chapter number 5. Right now I'm just using it as an example. So first technology risk is frequent changes or obsolescence in technology. Well, technology becomes obsolete very soon. So even though you have installed the latest technology in your company right now, still it is very much possible that within few years that will become obsolete. So again, you'll have to change the technology. Second, multiplicity and complexity of systems. Well, technology architecture used, yeah, well, this says that technology architecture used for services could include multiple digital platforms, and it becomes quite complex. Imagine banking software will be having integration with so many other softwares, so many other businesses, so many other companies. Well, that makes it multiplicity and complexity. That makes it much more complex because it is integrated with so many other things. Different types of controls for different types of systems. Control measures will also be different in different softwares. Every software does not have the same control measures. Like for example, SBI Bank, ICICI Bank, IDBI Bank, all of them will have different requirement to create a password. One bank will say that your password should contain special characters, other bank says that password should not contain special characters. So all of them will have different types of control requirements. That also makes it risky. Alignment of business objectives with regulatory requirements. Well, problem is that if I try to follow all the regulatory requirements, then I might not generate business profits. If I target only business profits, then I might violate some legal requirements. So there is a problem of aligning both the things together. Dependence on vendors. Yes, when I use lots of technology, then in case of any problem in technology, I don't know how to solve the problem. I will have to depend on the vendor, software vendor. So every time for the smallest of the issue, I need to call the software vendor that this is the problem, please help me out. That makes me dependent on the vendor. Vendor related concentration risk. Vendor concentration risk says that there may not be only one but multiple vendors providing different services. Like say in my mobile phone, my mobile services comes from two vendors. One is Samsung, who has given me the phone instrument. One is Airtel, who is giving me the network. So it means that multiple vendors are coming together to provide this service to me. Now what is the problem in that? Well, problem is that whenever there is a problem, then these vendors might blame the problem on one another. Like say if I am not able to make calls from my mobile, I go to Airtel people, they will check the phone and they say that no, it is not Airtel fault, they'll say it is Samsung fault. I go to Samsung people, they will also check and ultimately they say that it is not Samsung fault, it is Airtel fault. In short, they might keep blaming the things on each another. They might keep blaming the things on one another. Ultimately, my problem does not get solved because there are multiple vendors. The same way, in case of company networks, when they are using technology, there are so many different vendors. Different company has given hardware, different company has given the networking devices, different company is providing the network services. So when if I am facing a problem that my software is not working, I call the software people, they say no, it is hardware problem. I call the hardware people, they say no, it is network problem. I call network people, they say no, it is communication problem, BSNL ka problem. So they might keep blaming things on one another. That is vendor concentration risk because there are multiple vendors providing different services. Segregation of duties we did in chapter 3. That is also a problem here. There might be conflicts in segregation of duties. Plus, in case of technology, there is a risk of cybercrime, there is a risk of internal employees causing damages, there's a risk of social engineering. Social engineering means to use a social network or do socializing with your employees to extract information out of the employees, yeah, in order to commit some frauds. That is social engineering. And finally, continuity of business is also at risk. Look, in case my business is using technologies, then my business is over dependent on technology. Now we are so much dependent on the technology that it might be a problem that my continuity of business is at risk. Yes, my business is so much over dependent on technology that someday if there is some major exigencies, technology does not work, then my entire business continuity might be at risk. So these were all the technology related risk. Data related risk we have done in chapter number 3. Further, we have certain terms, certain words related to risk management, certain terms related to risk management, like these are all different words, different definitions pertaining to risk management. I'll just give you a short revision of all of them. First, risk management. Risk management is basically pertaining to reduce risk to an acceptable level by maintaining that level and minimizing uncertain events. So risk management means to reduce risk. How to reduce risk? Well, you can reduce risk by minimizing uncertain events. But well, how to decrease that uncertain events? Look, you cannot prevent a bad event from happening, but you can prevent the uncertainty. Now what does that mean? Say I cannot prevent the event itself, but I can at least predict what can go wrong and be prepared for what can go wrong. For example, I'd given you the same example earlier. Remember, giving your CA exams is risky. Why risky? Because either you can pass or you might fail. Both options are there. There is uncertainty. You don't know whether you will pass or not. Well, you cannot ensure that you will definitely pass. You cannot make the exam easier, but you can make your preparations very good. If you make your preparations pretty good, such that even if the paper turns out to be the toughest paper, still you are able to comfortably answer, meaning you have reduced the risk. So reducing risk simply means decreasing the uncertainty. Minimizing the uncertain events is your risk management. Well, other words, asset means something that is of value. Information, software, or employees might be an asset. Information is an asset for the company because information is valuable. Softwares are also valuable. Employees are also valuable. Asset is something that cannot be easily replaceable, and it is creating a part of the corporate identity. A company is known because of its asset. Some companies known because of its information, some companies are known because of its software, some companies are known because of their employees. That is asset. Vulnerability is a weakness in my system. A weakness in my system because of which a hacker or a virus can attack this part is called as a vulnerability. Weakness in my system. Vulnerabilities will allow a threat to harm them. Yes, vulnerabilities will allow the threat to cause harm to me. For example, some examples are given that you can read. Threat means an event, entity, circumstance, or event that has the potential to harm. Threat is something that can cause harm to my software. Generally, threat will target vulnerability. Generally, the threat will target vulnerability. Threat cannot exist without a target asset. Like if I have nothing to lose, then I have no threat. Threat cannot exist without a target asset. You know now what is asset and vulnerability. So threat is something which will cause damage. Vulnerability is my own internal weakness. Exposure refers to the extent of loss when a risk materializes. Whatever uncertain event you are fearing, if that event actually happens, then how much loss will happen? I feared that there might be, say, fire breaking out in my office. That is a risk possible. But if at all fire does break out in the office, what can be the extent of loss that you estimate is called as exposure. Generally, exposure does not cover only the immediate impact. not just the immediate impact, but it will also cover a long run impact, that because of this risk materializing in the long run, what will be the problem, that becomes my exposure. Likelihood is the probability that the threat will succeed, chances that the threat will succeed, that what are the chances that the risk will actually materialize, that is called as likelihood, in other words probability. Attack is an attempt to gain unauthorized access. It will be malicious, matlab bad, intentional and external, is called as an attack. And countermeasure are the measures that you take to reduce the vulnerability, measures that you take to decrease the risk, that will be called as countermeasure. Yeah. Next, risk management strategies. Well, certain strategies given here. Number one, you accept the risk, tolerate the risk, accept the risk. Some risks are considered to be very minor, very mild. So if the risk is very minor, then you accept the risk because their impact and probability of occurrence is very low. Impact, matlab damages it will cause, is very low, and chances of that thing happening is also very low. Then you accept the risk, tolerate the risk. Exact same is the last one, turn back. Turn back means when the risk probability or impact is very low. Same dekho, impact probability is low, impact probability is low. In such case, what will you do for this risk? Simple, do nothing, ignore the risk, do nothing. That is called as turn back, or that can be also called as tolerate the risk, accept the risk. But terminate, eliminate the risk means you stop doing the activity which you find risky. That will be called as eliminate the risk. If a software that I purchase from a vendor is risky, then don't use that software. That is called as eliminate the risk. Transfer or share the risk means you share the risk with trading partners. Like if purchasing a software was expensive, so it is risky, I will purchase that in partnership with somebody else. So that is sharing or transferring the risk. Also, another example will be outsourcing. I outsource my manufacturing work to another company so that I will now do only branding work. That means I have shared the risk with another company. Treat or mitigate the risk. Treating the risk or mitigating the risk means you implement controls against that risk. That becomes treating or mitigating the risk. These are the different risk management strategies. Next, enterprise risk management and its benefits. Well, so far we just did general aspects about risk. Now I define a particular term, enterprise risk management. Means what? It is defined as a process to identify potential events and manage events that may affect my entity and manage the risk to be within its risk appetite. So mainly risk management, enterprise risk management means how do you manage risk in company? How do you manage? Well, you identify the events that might be risky and you manage the risk to be within its risk appetite. What is risk appetite? Risk appetite means my ability, my tolerance of risk, or my ability to handle the risk. How much risk can I tolerate? So I should manage that the risk turns out to be within my risk tolerance, within my risk appetite. Look, as such, there never exists a risk-free environment. ERM does not even create such risk-free environment. Rather, ERM will just enable the management to operate more effectively in an environment filled with risk. ERM will just help you to operate more effectively in a risk-free environment. Like for example, CA exams will never be risk-free, but good preparation for the exam will help you operate more effectively during that risky exams. Yeah, that is your risk management. Well, under risk management, there are certain benefits described here. Benefits is that because of ERM, you can align risk appetite and strategy. Risk appetite is my tolerance, how much risk am I willing to take, and strategy is what my company wishes to do. Well, my risk appetite and my strategy should be balanced. If I have made a new strategy of say starting a new branch, then I should be ready to take some risk if I'm starting a new branch. Yeah. Link growth, risk and returns. Yes, risk and returns are always relative to each other. Higher the risk, higher the return, general principle. Decide your risk response decisions. ERM will help you to better decide how will you respond to the risk avoidance, risk reduction, sharing, acceptance, etc. Minimize operational surprises. Surprise over here means unexpected things. Look, if you have done risk management, means you have already identified events that might cause risk. Now, if you have already identified all possible future events, meaning you are now ready for all the adverse events. If you are already ready for all adverse events, meaning now none of the adverse event will be a surprise for you. None of the adverse event will be unexpected for you. Because you have already expected all possible events, that is minimizing operational surprises. Identify and manage cross-enterprise risk. Cross-enterprise risk. Do not manage only one risk. You also manage other risks because of that. If I am planning to open a new branch in another city, then with this new branch, I will not just study the risk of the new branch. I will also study the risk of my existing branch. That if I open new branch, then what will be the problem in my existing branch, that also I need to study. That is my cross enterprise risk study. Seize opportunities. Look, I told you that there is a very small difference between risk and opportunity. Something that one person considers as risk, same thing other person might consider as opportunity. Like giving your CA exams, you might find it risky because there is a fear of failure. But if you look at it in another way, giving CA exams is also an opportunity for you, because it is an opportunity for you to prove your intelligence, to prove your abilities. So if you look at the negative side of it, you find it risky, but if you look at the positive side of it, it looks like an opportunity. Yeah. So risk management will help you seize the opportunity rather than fearing the risk and not doing the work. It will help you to seize the opportunity and do that work. Yeah, that is seize opportunities. And rationalize capital means improve capital allocation. You can better allocate that capital. My capital I will use for which all activities based on the risk management, risk analysis. You decide that which activity, which project should I invest how much capital. Well, all these I say are the benefits of ERM. Further, enterprise risk management framework. Well, under this we learn certain components of risk management like these are various components, meaning these are the things involved in risk management. Number one, internal environment means to see that how my entities people view the risk and controls. How is the risk and controls viewed by the company's entities people internally in my company? How do my employees view this particular risk and controls? This will help me establish a risk appetite. If I am planning to open a new branch, I will first see that are my employees ready for a new branch or not. What do my employees feel about opening a new branch? That will help me establish my risk appetite. Objective setting means you set the objectives of your company. That objective is what you set should be consistent with the risk appetite. So number one, you decide your risk appetite by seeing the internal environment. Number two, you set the objectives that is consistent with the risk appetite. Then event identification. Now this is important. Event identification means to identify potential events that might cause damage to my company. Identify potential events that might have impact on my entity, that should be identified. Also, distinguish between risk and opportunities. Certain events might pose a risk, certain events might show an opportunity. You need to differentiate between these two. Risk assessment. Once you identify the event, now you analyze the risk associated with that event. Consider both risk likelihood and the impact. Risk likelihood and impact. Now you know impact and likelihood. Likelihood means the probability, impact means what damages will it cause. Decide risk response. Yes, so how will you respond to the risk? Avoid the risk, accept the risk, reduce or share the risk. We learnt about it. And then implement the control activities. Control activities means your responses are then carried out. These responses, you carry out these responses, that is called as control activities. Information communication means your employees should be given clear communication, clear information regarding what is expected from them, what is their roles and responsibilities. And then finally, monitoring. Monitoring means you monitor your risk management activities. Modifications are made whenever necessary. These are the steps involved in risk management. Once again, these are the components or steps involved in risk management. You first decide the internal environment, matlab study that what my employees think of this risk. Then you set your objectives based on what is the risk appetite. Third, event identification, identify what events are posing a risk, what are the events that might cause risk for your company. Next, risk assessment, analyze the risk of those events, analyze both risk probability, risk likelihood, and the impact of the risk. Then decide what response will you give to the risk responses. Control activities means you conduct those risk responses are carried out. Information and communication should be clearly given to all the employees, and during the risk management, if required, modifications are made whenever necessary. Yes, these are the stages involved in risk management, enterprise risk management. Next, we talk about controls. Controls over here mainly pertains to internal controls. Now remember earlier when I had discussed in chapter 3 IS audit. During that IS audit, I gave you an example regarding the purchase process, that how does the entire purchase process happen. Right from the production department, they will send MRN, then they will send the PRN, then purchase order, then purchase invoice. That entire process was your purchase process. Well, same purchase process is described over here. Plus, during that process, I also gave you example that how is the controls implemented in the process. Controls implemented were such that controls implemented in that were such that without entering purchase order, purchase invoice was not allowed. Without entering purchase requisition, purchase order was not allowed. Well, this was basically an example of controls. This was basically an example of internal controls. Internal control in that sense, in that example, was that internally in my company they had control systems that without the first task, the next task is not allowed. That types of controls is my example over here. That exact same example is described over here that you can read. Types of control can be manual control, automated control, semi-automated control. Well, same example I can continue here, that while making the payment, your computer system will compare. You need to compare purchase order with the GRN and purchase invoice, because payment will be done only after purchase invoice is obtained. But the amount written in purchase invoice should match with the purchase order, and quantity written in purchase order should match with the GRN. In other words, payment will be done only if the goods are received, the actual physical delivery of the goods has happened, and my invoice, the purchase invoice coming from the supplier, shows the same amount as the purchase order. Then yes, payment will be done. But in order to do that, there are two controls involved, automated and manual controls. Like say purchase order GRN can be compared automatically. Why? Because both these documents are made within my software, within the same software. My same software, I generated the purchase order in the same software, and I create the GRN also in the same software. So at the time of creating the GRN, it will automatically compare the details with purchase order. If the details do not match, the software will automatically give out the error that GRN purchase order do not match. But purchase invoice comes from the supplier. It is not my internal document. So whether the purchase invoice contains details same as purchase order or not, it cannot be automatically checked. It has to be manually checked. Yes. So in case of purchase invoice with purchase order, you might have to do manual checking. But for comparing PO and GRN, there might be automated checking. In short, types of controls. Controls can be manual control, automated control, or semi-automated control. That example what I gave was semi-automated control, that GRN with purchase order comparison could be automated, but verification of invoice, vendor invoice, has to be done manually. Yeah. Anyways, further importance of controls. Importance of controls that you can read. Why are controls so important? Applying IT controls, also general discussion. Under the applying IT controls, you have general controls and then application controls. General controls, application controls are somewhat what we had done in chapter number 3. General controls are like the managerial controls we did in chapter 3. Some of them I will still show you here. Dekho, we'll revise. General controls are known as infrastructure related controls. They pervade across different layers of IT environment, apply to all system components, processes and data. These are general controls, general, so it applies to all system components, all processes, all data. For example, that information security policy should be approved by the senior management. Administration access and authentication controls, access control, authentication control should be there. Segregation of duties should be there. You know now what is segregation of duties. Controls over acquisition and implementation should be there. Acquisition means you acquire a ready-made software, plus controls over development and implementation should also be there. Acquisition means to acquire a ready-made software. Development means to create a customized software. Change management, well, whenever there is changes in your softwares and all, you need to manage the change. IT solutions need to be changed in tune with the changing needs of the technology. Backup and recovery is also general control. Confidentiality, integrity, availability, CIA it's called. Confidentiality means to keep the data secret, which is not released to unauthorized people. Integrity means the data remains connected. You change at one place, it automatically changes at all places. Availability means the data should be available whenever you need it, whoever needs it. Incident failure response, like failure of technology, any failure of technology, whether it is responded and managed properly or not, that is also a part of control. Servers and applications running on them are monitored under the general controls. You monitor the applications whether they are running continuously or not. Service agreements with the vendors are to be reviewed periodically, and personal developed deployed should have proper skills. People employed should have proper skills and abilities to manage the companies and all. These are all the general controls. Application controls are almost like the application controls we did in chapter 3. These are the controls built in into the application software. Look, I'm discussing these controls very fast because, as I said, this is chapter 1, introduction. More detailed version of that you had already done in chapter number 3. Yeah. Then indicators of effective IT controls, that becomes your self-study. You will do that. Framework of internal controls as per the standards on auditing. Look, as per the auditing standards, they have defined what is internal control. Internal control system is defined as per your auditing subject. That you will read. I'm not discussing. That is from your auditing subject. And the last thing under controls is components of internal controls. Components of internal control. Components of internal control, under that, look, we did components of enterprise risk management. Similarly, now this is components of internal controls. First one, control environment. Well, top management has to create an environment of control in the company. Look, if the top management does not take the control seriously, then internal employees will also not take the controls seriously. So top management has to set up a tone at the top regarding importance of internal control. They need to make the employees realize importance of internal control. That is making the control environment proper in the company. Next, risk assessment. Risk assessment is to same as what we did in the risk management. Risk assessment is to assess the risk, decide the probability of the risk, possibility that the event will happen and all. Risk across the entity are studied relative to the risk tolerances. You study that what is the risk as compared to my risk tolerance. Risk assessment also requires management to consider the impact of the possible changes that may render the internal control ineffective. You also study that what changes or what external events might cause my internal controls to go ineffective. What are the external events that might cause my internal controls to go ineffective? That also you study here, that is risk assessment. Control activities is basically to implement the controls. Finally, controls might be preventive or detective controls. We've done that in chapter 3. Controls might be manual or automated controls. We did that here itself here initially. And it involves to check, to ensure that whether the transactions are authorized or not. Number one, to check whether duties are segregated. Segregation of duties you need to check. You need to check whether assets and records are safeguarded. Safeguarding of assets is also part of controls. Look, these are all examples of the controls. Transaction authorization you check, segregation of duties you check, asset safeguarding you check. To achieve effectiveness and efficiency, remember effectiveness, efficiency we did in chapter 3. Also to manage, mitigate and reduce the risk. These are certain examples of controls to be implemented. Information and communication should be given both internal and external sources and all. Okay. And last step is monitoring of controls. Monitoring means to check whether controls are going on properly or not. It involves ongoing evaluations and separate evaluations. Ongoing evaluations are like concurrent audit. You check while the controls are being implemented. Separate evaluations means you go and check at the end of the year. Yes, both are needed, that is monitoring of controls. Anyways, these are the different components of internal control. Lastly, limitations of internal control that you will read. Diagrammatic presentations, as I said, I will cover at the end of this session last. So I'll skip that for now, and the next part I will directly show you. Next, we had discussion regarding risk and controls of specific business processes. Risk and controls in a specific business process. Look, we learnt what is a business process. Now, under this topic, you have a long list of examples of risks in various business processes. As such, the heading says risk and controls. But you remember, I had talked about only risk and controls. I told you how to design the controls. But the examples given here will be regarding risk in specific business process. Specific business processes like procure to pay process, or say sales process, that is order to cash process, inventory process, HR process, general accounting, general ledger process and all. So fixed asset process and all these were the different business activities, business processes. And in each of these business processes, what all controls are to be implemented, what all risk exists. This is a long list of all the risk involved in routine business processes. Well, I've given you a shortcut method to remember majority of the risk over there. Most of the risks given under this part are classified under these three categories. Categories as configuration, masters and transactions. Remember what is masters, what is transactions. Masters, master data. Master and transaction is data. Configuration is settings. Master data is the data which is relatively permanent. Master data will be the data which is relatively permanent. It is long term. For example, you create the ledger account, you create the list of debtors and creditors. This comes under master data. But transaction data will change with every transaction. For example, when I'm recording a purchase transaction, then supplier name, supplier address, supplier GST number does not change each time. Then this data becomes the master data. But say amount of the purchase, quantity of the purchase, date of the purchase, invoice number, these things will change with every entry that you make. These things that change in every entry that you make, that becomes your transaction data. Yeah. So in short, master data is the one which remains relatively permanent. It does not change in every transaction, while transaction data changes with every entry that you make. While configurations are basically system settings. Like when you set up a new software at the time of setting up the software, one time initially you have to set the configurations. Yes, one time initially you have to set the configurations. These are the basic settings of the software. For example, mapping accounts to the transaction, like which account is related with which transaction. Also, it involves creating user account, activating deactivation of user accounts and all, deciding user passwords, deciding user access privileges, that which user account should be given what permissions and all that comes under configurations. Yes. Anyways, now that you know configurations, masters and transactions, I've given you a long list of examples here, examples regarding risk and controls involved in various business processes, various individual business activities, risk and controls involved. You have this long list over here. Now, I'd given you a shortcut method to remember this long list here. I'll just remind you that shortcut. It was like this. Dekho. By the end of that topic, I had given you a list of general points regarding risk in master changes, risk in transaction entry. Notice, in case of master data, risk is of changes. In case of transaction data, risk is of entry, risk is of input. And I had given you general points over here that I wanted you to memorize. Plus, I gave you method that using these general points, using these 12 general points, how can you create the entire list of examples that they have given. Yes, that I had explained to you. Well, I'll just remind you that for one of the topic. So the first topic was risk in purchase process. In case of purchase process, what is the master data involved in purchase process? Well, purchase process mein master data is the supplier master. That is the list of supplier which contains the address, telephone number, bank account details of the supplier. Well, in case of purchase process, transactions will be purchase requisition, purchase order, accounts payable, credit note, payment, etc. These are the transactions involved. Now, in case of master, these are the risk involved. Like risk of unauthorized changes in the supplier master, risk of changes not input in the supplier master, changes there but it is not input in the master, or changes are not correctly input, changes input are delayed, or changes are not up to date in the master, and access to the supplier master is not restricted to authorized people. These are the risk involved in case of supplier master. Can you draft that? Yeah. While similarly, risk in transaction entry. Well, valid transaction is not input, invalid transaction is input, that is a risk. Transaction not correctly input is a risk. Transaction input in wrong period is a risk. Transaction is delayed is a risk. And access to the transaction is not restricted to authorized people is also a risk. These are the risks involved with transaction. And I told you to use these 6 items of risk with each of the transaction here. So for each transaction here, if you use 6 items of risk, each transaction you use 6 items of risk. So total 5 transactions, 6 items of risk, you can create 30 points of risk over here. Do you remember that shortcut? I hope you do. Well, these 30 points of risk that you create, I don't suggest you put all the 30 points in your exam. Rather, you do some selection, you do some smart work there. Like say with purchase requisition, use only the first 3 points. With purchase order, use the next 3 points, and so on. Well, that is how you can create maximum number of risk points here. This was pertaining to purchase process. Similarly, sales process, similarly, all the other processes also, you create points based on this shortcut here. Can do that? Yeah. Okay. So that entire list of risk in specific business processes becomes now your self-study. These are the general points which I had mentioned. Last part of the chapter was regarding regulatory compliances. Certain regulatory compliances, I am not discussing all of them. You will have to read them on your own. Guidance note on guidance note given by some institute and all that you will read. Management responsibility comes from the Companies Act and all. Auditor's responsibility also comes from the Companies Act. I will discuss only this part, IT Act. IT Act, there is an act given by the government under the name Information Technology Act. This act is basically creating cyber laws in India, because of which many benefits have happened. Benefits like these: because of the cyber laws, email is now considered as a legal form of transmission, legal form of communication. Because of cyber laws like IT Act, electronic commerce, e-commerce has become possible and legal. Digital signatures, we learned in chapter 3, if you remember. Digital signatures have also become recognized because of these cyber laws. Because of cyber laws, government can put notifications on the web directly. Government filings have also become now electronic because of these cyber laws and all. It provides provisions regarding various issues of security with respect to the internet and all. All that is because of the cyber laws. Then there is a list of computer related offenses. What is considered as offense under the IT Act? Well, there's a list of things that are considered as offense under the IT Act. Creating a fake profile and frauding someone is an offense. Hacking email account is an offense. Credit card fraud, web defacement. Web defacement means you damage website of some other company, that is called as web defacement. Virus, worms, backdoors, trojans and all is also cyber crime. Cyber terrorism, sale of illegal articles, pornography, phishing. Phishing is basically getting data from someone, getting my credit card information by fooling me, getting my password by fooling me, that is my phishing activities. All these are considered as offense under the IT Act. This is just a list of examples. Source code theft. Source code is basically instructions written inside a program. When a programmer will make a program, then his basic set of instructions that programmer has written is called as source code. Now I have written a program, you steal the source code, then you can release the program under your name. That is called as source code theft. So source code theft is also an offense under the IT Act. And then privacy. Privacy means my private data should not be released by the company to outside people. If they release it, then there is civil liability, criminal liability. There is also a definition of protected system. Just a minute. There's also provision of declaring any computer or computer system as a protected system. Once it is declared as protected system, then there are more restrictions on that. Penalty for breach of confidentiality is also there. Breach of confidentiality. My confidential information is with Amazon, Flipkart. If they release my confidential information to others, then there will be penalty to be paid by them. And IT Act has also set up some regulatory authorities for the breach of privacy and all. Sensitive personal data information, SPDI. Well, government has made rules called as SPDI rules, which define a data protection framework for processing of digital data by a body corporate. So these rules are rules not for you and me. These are the rules for the software companies. The rules have been given to software companies, telling them that how are they supposed to keep my data, how are they supposed to manage my personal information, how are they supposed to handle my private data. For that, they have defined what is personal information. Information that relates to a national person, that is capable of identifying such person. Personal information means any information that is able to identify me. Under that, sensitive personal information is more sensitive, more crucial, like my passwords, physical or mental health condition, medical records, financial information, sexual orientation. Biometric information is like fingerprint scan, retina scan and all. If somebody gets to know or if somebody can duplicate my fingerprint, then it is my personal information. It is an information that will be capable of identifying me. Well, if if Google Pay has my fingerprint information with them, then they should keep it secured as per the SPDI rules. Yeah. Anyways, that covers all other topics in my chapter here, all other topics other than the diagrammatic presentation. Next, we will be going for the diagrammatic presentation. Just a moment, I'll scroll through that. Okay, so under diagrammatic presentation, two important diagrams we are learning. One is flowcharts, other was data flow diagrams. Flowcharts was basically what? Flowcharts means, just a moment. Okay, you see here flowcharts. Flowcharts means what? Flowcharts is basically a diagram showing logical flow of processing done in a program. So first thing, what exactly is a flowchart? Flowchart is a diagram that shows processing in a program. So when a user wants a software, he will call system analyst. System analyst will study his business and decide his requirements. Well, these requirements system analyst will give to the programmer. How will he give? He will give that in the form of flowchart. Yes, the flowchart is a diagram that system analyst will make for telling the programmer that what instructions he needs to put in machine language. So flowchart will contain all instructions. Flowchart will contain all instructions. All the instructions that are to be given to the CPU. Who will decide these instructions? You will decide. System analyst will decide. And you have to show these instructions in a diagram format. After this, what will the programmer do? Well, programmer will take this diagram and simply convert that into the machine language. Programmer will just convert this into the machine language. Do you understand that? This is the purpose of the flowchart. Well, to make the flowcharts, I had discussed certain rules of making the flowchart. Rules of making the flowchart, that was only for practicals. You don't have to memorize the rules. But well, rules I am not revising. I told you rules were the most important thing in making the flowcharts. But I will not be revising the rules. Instead, we directly revise the flowcharts. Well, under this topic, I had given you, we had made a certain flowcharts like these. I had given you some examples here. The first flowchart was to draw a program flowchart for finding summation of first 100 odd numbers. It was a flowchart to find the summation of first 100 odd numbers. But if you remember, later I converted that question and said that I want summation of first n odd numbers. Instead of just 100 odd numbers, I said I wanted summation of first n odd numbers, where n is a number given by the user. So user can make summation of any amount of odd numbers as he wants because of this flowchart. Well, I'll show you that diagram here. Dekho. This was the diagram we had made. Every flowchart will start with the command start. Every flowchart will start with the command start, then clear working locations, and end with the command stop. These three things should come in every flowchart. Further, then I've taken input n. What does this indicate? This indicates that you are asking the user to give an input. User will give a number which I am storing in a location called as n. User gives a number which I am storing in location n. Then for making summation of odd numbers, I started with the first odd number a equals to 1. First odd number 1, and that 1 is collected in location s. This s equals to s plus a was the command which shows that you are collecting different values of a. Yeah, so that number 1 is collected in location s. Then go further. 1 a value was 1 plus 2, it becomes 3. 3 is then collected in location s. Then again plus 2 becomes 5. 5 is then collected in location s, and so on. Yes, you keep collecting different odd numbers over here. But until when will you keep going into this loop? Well, this loop will keep repeating until a equals to 2n minus 1. 2n minus 1 will become the last odd number. Yeah, so if a equals to 2n minus 1, yes, then you come out and print the answer, stop. If no, then you go back and keep taking the next odd number. This was your first flowchart, summation of odd numbers. Yeah. Second flowchart I had given you was to calculate the tax payable. Well, imagine a tax calculation software that will do tax calculation for you, and under that software, say input will be the taxable income that you mention. Rate of tax, you don't have to mention, it will be calculated by the software, and the software should give output of the tax payable. Yeah, so you need a software in which I give input of taxable income, net taxable income, and the software should give me output of the tax payable. Plus, in the same software, I also wanted you to consider surcharge 7.5% of the tax if taxable income is more than 1 crore, and also I wanted you to consider education cess 4% of the tax. Well, these things, how to present in flowchart, I show that here. Remember, I told you that flowcharts can be of two types. Mathematical flowchart is the one like the odd numbers wala flowchart, or practical flowchart will be the one like this. This is basically a practical flowchart where I'm making a flowchart for some actual software that is practically used in business purpose flowchart. Yeah. Well, in any case, any flowchart will always start with start clear working locations, which I will not show again now. But in this case now, after that I have input NTI, that is taxable income. The taxable income, which is the input, will be asked from the user. So user will type the taxable income. Once the software gets the income from the user, it will check whether income is less than 2.5. If yes, then it is slab 1, tax equals to 0. If no, you check less than 5 lakhs. Now why am I checking only less than 5? Why not more than 2.5 and less than 5? Well, because less than 2.5 no means it is more than 2.5. You just need to confirm it is less than 5. If yes, then it falls under slab 2. I calculate tax under slab 2. Slab 2 is 5% of income above 2.5 lakhs. If not less than 5 lakhs means it is more than 5. Check whether it is less than 10. More than 5, less than 10. If it is yes, then less than 10, yes, means it falls under slab 3. Then tax payable is 20%. 20% of income above 5 lakhs, NTI minus 5 lakhs. Plus you will also pay 12,500. Why? Because when you reach the third slab, if you have reached the third slab, meaning you have already earned the entire income in the second slab. So on the entire income of second slab, 2.5 lakhs, you pay 5%, so 12,500 you have to pay, plus 20% of income above 5 lakhs you pay. I hope you remember that calculation. That is for income less than 10 lakhs, and if no means it is more than 10 lakhs, so it falls under slab 4. You pay 30% of income minus 10 lakhs, income above 10 lakhs, plus you pay 12,500 like this, plus you pay another 1 lakh for the income under the third slab. Under the third slab you have earned 5 lakh rupees, on which 20% 1 lakh you pay, plus 12,500 you pay under the second slab. Total 112,500 plus 30% of income above 10 lakhs you pay. This becomes your tax payable. Anyways, then I merge all those arrows and take it further to calculate the surcharge. Look, if there is a change of page in between, then you have to use a connector like this. Yeah, so I converge all of that. So now after converging, what do I have here? Here I have the amount of tax payable, basic tax payable amount I have. On this basic tax, I might want to add surcharge. So I check if NTI more than 1 crore. If yes, then I have to add a surcharge. How do I add surcharge? Tax equals to tax into 1.075. What does this 1.075 indicate? Well, this indicates that your tax amount is increased by 7.5%. Tax amount increased by 7.5%. So my tax value increased 7.5% gives me the new tax value, and that new tax value is saved in the same location T. Yeah, when I multiply 1.075, meaning the amount increases by 7.5%. That is not IT, that is not EIS, that is mathematics. I hope you understand basic 10th standard mathematics like that. Anyways, if not, then don't increase surcharge, directly go further. But go further, you increase the education cess. So now T equals to T into 1.04. 1.04 is adding the education cess. No condition, education cess is added to all transactions. And then finally print T and stop. This becomes your tax calculation flowchart. Next, you had a question regarding question 3 was regarding calculating sales value or billing software. It was a question about billing software where you had been given various cashback offers which involved, say, some initial discount, and further it involved additional discount also, additional discount, extra discount. So initial discount depends on the mode of purchase mode, website or phone app or any other purchase mode, then no discount. While extra discount depends on the reward points. They said that every purchase that is eligible for discount will be given 10 reward points. So which purchases will be given reward points? Only these first two. And reward points are given, 10 points are given for every single item of purchase. If the reward points are between 200 to 300, then you'll get further 30% discount. If reward points exceed 200, then you'll get further 40% discount. Now for this question, they have already told you to take purchase mode, bill amount and number of purchases as input, and they say you make a flowchart to calculate, display the total reward points TRP and the total bill amount payable by the customer. So I'll show that here. Dekho. The question itself says that you take purchase mode, bill amount and number of purchases as input. So I take that as input according to the question. Then under that I check if purchase mode is website, if purchase mode is phone app. If website, yes, then I give 10% of bill amount as discount. Initial discount is 10% of bill amount. If purchase mode is phone app, then 20% of bill amount is initial discount. Yes, and in both these cases I also give reward points. The reward points will be number of purchases into 10 is the reward points given in both these cases. And then further, based on that I calculate the bill amount. Bill amount will be original bill amount minus this initial discount, gives me my revised bill amount now. Now I check the TRP. Based on this calculation, if the TRP is between 100 to 200, if yes, then extra discount is 30% of bill amount. But if no, then check whether TRP is more than 200. If the reward points exceed 200, yes. If the TRP exceed 200, yes. Then extra discount will be 40% of the bill amount. And then I converge these both and take it further to calculate the total bill amount. Total bill amount will be this bill amount, this bill amount minus the extra discount here will give me the total bill amount. And then print TRP, total reward points, and total bill amount. These two things you were asked to print, that is what I print. Yeah, that was my question number 3. Question 4. Question 4 was regarding salary related softwares where a bank is having 500 employees and you are supposed to make some calculation pertaining to salary. It involved calculating the salary with basic pay, DNS allowance and HRA. Plus after calculating salary, they wanted you to classify the employees in each of the following salary slabs. They wanted you to classify the employees in these particular salary slabs. So I'll show you the diagram directly then. This diagram involved again start, clear, working locations, input, basic pay and class. Basic pay of each employee was already given and class was also given in the input. Based on the class you have to decide the HRA. Yeah, so I'm already having the basic pay. Now to calculate total salary, I need HRA, I need the DNS allowance. DNS allowance is same for all. that is 60% of basic pay, 0.6 into basic pay. But HRA is different in case of different classes. So I check if class equals to A, if class B, and if not, then it has to be class C. Class A is given 30% HRA, class B is given 20% HRA, and residual remaining class C is given 10% of basic pay as HRA. I converge all that, then I calculate DNS allowance. So now I already had the basic pay, I also have the HRA, and I have the DNS allowance. Add the three of them gives you salary. Now that you have salary of this employee, you need to classify the salary under either of the four categories. Plus, for each category, you need to count number of employees in each category. Look, so far I have just calculated salary of the first employee. This first employee salary, I will check like this, that the salary less than 8,000, then it falls under category 1. I will put a counter here under category 1. What is a counter? Counter is a location which will simply count. So if salary less than 8,000, if yes, then I put a counter here. Counter will count that C1 equals to C1 plus 1, meaning every time your flowchart gives answer yes here, this location C1 will increase by 1. But if salary less than 8,000 no, then it does not go here in this direction, then this counter does not increase, but then it goes under no direction down here, and in the no direction down here you check whether salary less than 15,000. If yes, then you run counter 2, then you increase location C2 by 1. Again if no, then C2 does not increase, you check salary less than 30,000. If yes, then counter 3 you increase, and again no means salary is more than 30,000, then counter 4 you increase. In short, based on the salary that is calculated here, your employee having this salary will be classified under one of these four counters. Once you have classified that employee, you converge that together and go further. Go further to what? Go further to the next employee. Look, your company is having 500 employees. If your company is having 500 employees, so far you have just calculated salary of the first employee. So far you have classified the salary of only the first employee. So now it goes back up here, back up till what? Dekho, that reverse arrow goes back up till before the input. Why before input? Because after you are done calculating things of first employee, now you ask the user to give input of the second employee. So now the user will give basic pay and class information of the second employee. That second employee basic pay and class information is given. Second employee salary is calculated. Second employee salary will be classified under any of these counter. It will be counted under one of these counter. After counting it in one of these counter, then again you go to the third employee. How to go to the third employee? Again input salary, input basic pay of third employee, calculate salary of third employee, classify the salary of third employee, then go to the fourth employee. Now, how does the software know when to stop? Well, to make the software stop, I use one more counter. One more counter here, I'm naming it as I equals to I plus 1. And look, I'm putting the counter after converging this arrow. So after converging these arrows, I put the counter here so that after classifying every salary, it will run the counter I equals to I plus 1. So I equals to I plus 1. When the first employee is classified here, then I becomes 1. Then when second employee is classified, I becomes 2. Third employee classified, I becomes 3. Accordingly, after 500 employees are classified, I will become 500. And this is where when I becomes 500, I will not go back into the loop. I will go further. Further, where will I go? Well, now at this juncture, when I reach this yes direction here, now I have already classified all 500 salaries. If we have already classified all 500 salaries, so what you have right now? Well, right now I have the total counter C1, total counter C2, C3 and C4. Meaning right now I have the total number of employees falling in category 1, total number of employees falling in category 2, total number of employees falling in category 3 and 4. I have so far I just have number of employees in each category. What I wanted was percentage of employees in each category. So this is what I do. Percentage of employees in category 1 is C1 divided by 500 into 100. Similarly, percentage of employees in category 2, 3 and 4. You calculate all percentages, print all 4 percentages, then stop. This was your flowchart number 4. And the last one, flowchart number 5, was a reverse question. Dekho. It was as such a reverse question where flowchart is already given. You need to answer that what output this flowchart will give. Well, notice in this flowchart here, what output will you get in this flowchart? Dekho. Okay, I had made you write the answer over here itself. Right now I don't have the answer, but I'll just remind you that dekho, what is happening in this flowchart is that I have three locations X, Y and Z. Each of the location is given initial number 10, 20 and 30. Then what it does, dekho, then I say S equals to Z. So there is another location S, and S equals to Z means the value of location Z is assigned to S. So Z ka 30 gets assigned to S. Then Z equals to Y. So value of Y is assigned to Z. Then Y equals to X. So value of X is assigned to Y. And then X equals to S. So S is assigned to X. So basically you see here what is happening. What is happening here is that all my values between X, Y, Z are just being circulated. All values of X, Y, Z are just being circulated. So after one circulation, what will be the answer? Well, after one circulation like that, after one circulation like this, answer will become X will get 30, this becomes 10 and this becomes 20. So actually after one circulation, this will become your answer 30, 20 and 10. And as per the flowchart given here, you see that they are checking I equal to I plus 1, that is like a counter, and they are checking if I equals to 1 then come out, meaning they are doing this flowchart only for one circulation, only for one circulation. Well, if this is done only one circulation and after one circulation you print the answer, what will be printed is this answer. What is printed is 30, 20 and 10. So 30, 20, 10 becomes my first answer. That output of the flowchart will be 30, 10 and 20. But in step B, if I put I equals to 3, in step B here, if I equals to 3, meaning now it will do 3 times circulation. Well, if this same circulation is done 3 times, then after 3 circulations, it will go back to the original value 10, 20 and 30. Because if there are total 3 locations, and you circulate values among them 3 times, then after 3 times circulation it will go back to the same original value 10, 20, 30. Same way after 6 circulation also it will go back to same original value 10, 20, 30. But in this given flowchart, if you replace I equals to 0 by I equals to 1 in step A, in the given flowchart means back to I equals to 1 here, but the initial I equals to 0, if that is replaced to I equals to 1, then you notice after the first circulation when I do I plus 1, at this time I will become equals to 2, and at this time if I becomes equal to 2, at this time if I becomes equal to 2, then after I becomes equal to 2, I equal to 1 will never happen. So it will keep circulating in this loop infinite number of times. I said this would become an infinite loop, so you will have no answer here. It becomes an infinite loop, so there will not be obtained any answer at all. Yeah, this was your reverse flowchart. Consider flowcharts as very important because, as I said, this might give you confirm marks in the exam. Yeah. Last part is data flow diagrams. In my opinion, not very important. I'll just give you basic definition here. Data flow diagrams is the diagram that shows flow of data or information from one place to another, shows the flow of data, not necessarily in a software. It is flow of data anywhere in the company for any business process. In fact, the purchase process diagram which I had made earlier, if you remember, the diagram of the purchase process, that was also like a data flow diagram. That purchase process diagram that I made was also a kind of data flow diagram. Anyways, here in the data flow diagram, some examples are given. You'll see here. The data flow diagrams are supposed to be ideally shown like this in the form of swim lanes. Swim lanes, because it will show the department headings on the left side here. Yeah. This diagram shows that customer will place an order. My marketing department will receive the order. It will forward the order to the distribution center. Distribution center will verify availability of stock. If yes available, it will inform the accounts department and arrange the shipping. If not available, then inform back to the customer. If yes available, then accounts department will print the invoice and shipping department will do shipping of the products. Look, this shipping arrow goes back to the customer so that you give the product to the customer. Yeah. Anyways, this style of the diagram was called as the swim lane format, where the processes are specifically identified to departments. Department headings are supposed to be written here in the form of swim lane. Because of this, owner can be identified. Owner matlab the department who is responsible for this work can be identified. This is your data flow diagrams. Anyways, further in that, you had 3 detailed examples of data flow diagrams. That example were just diagram based examples. Again, in that, on the left side, you'll see the department heads given. Well, I'm not revising those examples because I don't find this likely to be asked in the exam. I'd given you explanation during the class and I had made some corrections also in the diagram here. I hope you know that. 3 diagrams you had. One was customer order fulfillment is a type of sales process. Another one was also a type of sales process. And the third one was diagram for purchase process. Purchase process, you had a detailed diagram here, more detailed than the purchase process diagram that I had given. Anyways, that was your data flow diagrams. Anyways, this completes my chapter number 1. Chapter number 1, which was regarding your automated business process. Next session will be my lecture number 4, which will be regarding chapter number 2. And then last lecture number 5 will be about chapter number 5. Yeah, that's all for now. Thank you very much.